Good morning, everybody. This is Mike from ABC123Trader, and I'm going to be starting early today. Today is actually a big education day. It is a holiday, I guess, in the States, and so I'm really going to be kind of leery in trading. But what I want to do is, for the next while, because I've been sick all week, and this is actually the first day, I'm starting to feel a little bit better, and we'll get going here right away. So I'll transition into the risk disclaimer and I'll be somewhat a little more professional, I guess. So basically, this video is for educational purpose only, and then we'll get into the risk disclosure, such as of the disclaimer: futures, stocks, and options trading involves substantial risk of loss and is not suitable for every investor. The valuation of futures, stocks, and options may fluctuate, and as a result, client may lose more than their original investment. The impact of seasonal and geopolitical events is already factored into market prices. Well, whatever. The highly leveraged nature of futures trading means that small market movements will have a great impact on your trading account, and this can work against you, leading to large losses, or can work for you, leading to large gains. So basically, what I'm trying to tell you is watch out and try to become a consistent trader. Pinpoint your trades, and we'll get into this video. Or not video, I guess. This live session. Gonna see if it works. Alrighty, guys. Good morning. Sorry, I was looking at my OBS. It's kind of delayed here. Good morning, everybody. I don't know how many people are out there right now, but I should turn up my volume just in case people says hello. There we go. And today I really want to give you some education on all the indicators that I have out there. I'll go as many as possible for you traders out there. I apologize that I've been very, I guess, under the weather, let's say, and I just could not focus all week. Some from theft, that theft thing that drives me crazy, and just a lot of, oh, it doesn't work. A lot of things that the whole week was a write-off ever since Super Bowl, pretty much. And I thought maybe it was a tequila flu, but it sure wasn't a tequila flu. Anyways, what I want to do today is I'm actually getting a number of clients getting finally in the Discord, and they're chatting me personally, not as much on the general chat, but I'm getting a lot of conversation and about different things, and other guys are registering the product and trying it out, but they might be lost because there's so many indicators, and I get it. If I was a new trader or a trader trying to figure out what to do, how do I trade this? Okay, I get it. So basically, what the investors pack is, and I actually had a good conversation with Jose yesterday, and when I was actually, give me 1 second here, because what I'm going to be doing, unless if there is a trade opportunity today, but I don't think there will be. It's going to be flat. Let me switch I'm going to create a new workspace here. And I want to go totally blank here for you guys right now. I'm just going to create a new chart and we'll start here. I'm just going to go right to a 1-minute chart. You'll see exactly what I'm doing here. Sorry, guys. A 1-minute chart, not volumetric. I just want a minute for now. 5-minute, whatever. I don't care right now. I really want to give you some education so you can understand. Partially on my growing process. Yeah, see this? Long weekend. Okay, so now let me give you some education here. Hopefully I can close you guys. Okay, perfect. And if it's possible, say hello onto the live stream if you can, so I can actually find out, that we can get some interaction today. Because if I'm going to be talking to myself, it's for myself, I could just shut her down and enjoy my day. So, but with that being said, what I want to do is, let's get back here. When you look at saying, what is the investor's pack, et cetera, because I said we got 915, baselines, block scanner, bounce backs, day bars, day trend, blah, blah, blah. This is actually my growing process of learning to become a trader. And I've tested, back tested, changed things.
Charles B. said hello.
Good morning, Charles Bartella. I haven't talked to you forever. Make sure you get that new update, eh? You get it on the Discord, because I know you're a lifetimer. It's I switched the ABC Trader thing into a folder now, so you all this other stuff you don't get stuff. And also, if you didn't get the new update, there's a few other indicators in there. So, anyways, I'm gonna get back into it so you can understand. When this was my brain basically trying to figure out how to trade, because I wasn't a good trader. Just bottom line, I was too emotional. And when I broke through a couple of the aha moments of saying everything I was testing, percentages were some were poor, some were really good. I kept on, changing and manipulating, saying, well, why does the strategy work for one day and one day it doesn't, and why, and then there's so many tangents flying over, like through news events, and then all of a sudden you guys saying, Bitcoin is good, and then Bitcoin crashes. Now Bitcoin's good, and now Elon Musk is doing this, and what we have to do is we have to clear the screen, and the first thing you have to learn is understanding the market cycle. And I keep on repeating this, and a lot of people, and learning risk and reward. If you guys can do that, slowly but surely you'll become a consistent trader. And there are weeks like, if you saw some of my previous live videos, I lose $700 because I was only trying to show one trade a day, because I like to just, half hour, and then I can focus, because try to trade live for myself and try to educate is very difficult. It's easier, you're focused, for myself watching hockey, you're like I'm watching the hockey players trying to shoot right at that corner spot, you're trying to pinpoint these trades. But when you sit back and you start realizing actually how easy the market it is to read, but you have to have faith in a system, you will become, I can't use that word, you can become consistent. So let's get into it, and I'll understand, and we're going to go step by step here on different things. If you guys have an indicator, or I thought I turned that off. I have to close my workspace. If you have an indicator, or if you're using Unirank or range bars or volumetrics or just minute bars or tick bars, just tell me, and we can create different charts so you can, because I did an exam yesterday with somebody, and what the person didn't know, it was the exact same chart, 6 times really fast or 5 times really fast. I said, here, mark it up. I said, okay, here's another chart, click, mark it up. And they thought it was different time frames or whatever, and it was the exact same chart. And I said, let's look at it A, B, C, D, and E. And and then they realized it was the same chart. They said, but you saw five, 6 different things. And this is what catches us sometimes. It wasn't wrong what he was doing, but it's because we stare at charts for so long, we can actually trick ourselves into a losing trade. So now let's get into it. That's my education so far, and we'll get into it. So what I have found when I first started trading, because we search on the internet, when I first started with stocks, and I actually even tried Timothy Sykes-Penny trading, and I tried Jason Bond, and you're trying to learn and you're spending money. And then I went into Forex for a while, tested for 4 months, for penny micro lots, and then I finally decided futures was the way to go for myself, because you can once you figure it out, you can trade very little. But when I was first learning, I started with minute charts. And I did that for a long time, and I remember there was a software I originally bought, how to make $1,000 in a half an hour. Well, I wasn't making 1,000; I was losing every half hour. But in a sense, he did have some theory that I learned, a few pieces of wisdom that were true on a cycle. I didn't realize it was a fractal at the point in time. So, but what I found out in time after years, instead of looking at a 1 minute chart, and the guys keep on saying it, start top down approach. See where we are. Look at this week after week. Look at this vertical line. It hasn't since 2000. Or let's look at since, if we have it far back. Let me see if I can get more data here. Data series. Let's go 3000. Will it allow me? There we go.
PK.
Good morning, AK. Wow. Okay, now think about this, guys. This originally wasn't this the Trump election right here? Originally? And now this is. Let's go right.
Said you have a system you were teaching to trade here. I am new.
There you go, AK. You missed the first 15 minutes. This today is going to be education, and yes, there are systems, and this is what we're going through here. Okay. So right now, we're technically in October, November 2021. So let's just put it right to somewhere right around here. Boom. And then I'm going to put one more here. Now we're going to get into the psychological thing, and then we're going to get right down to the trading thing, and you can understand. And I can't go further back right now. So originally, when the Trump election started, this was everything, and I can't remember what the news events were here. And then this was COVID. Boom, all the way down. Then the rebound up. And look how the trajectory it was. Before it was just a nice run. But isn't that amazing how this section bounced back in continuation, and it's still this much of a vertical line? Well, guess what, guys? This can't go this direction that much longer. So when you're a trader in a longer analysis, you're going to tell me, if I knew this, I'm never ever going to short again. Okay? Impossible. So now when you're hearing on the news that these bubbles are coming, yeah, there's expansion and retracement. And now I'm going to look at one thing. We're only looking at long term, and then we'll get right to the pinpoint, because today is only a short day, and like we showed on the new chart, and I'll tell you why they're doing it. I'll give you a reason why. Is they're going to be reading after today. They're going to be doing a big push. Okay, guys. So I wouldn't even really worried about trading at all today, really, because if it's this flat, okay, and then we'll get back to the week thing. So far, someone has built up 30,000 contracts within this zone, okay, and we'll get into tell you if it's going to be a shorting or a long. So they're loading up a lot of volume here. Okay, guys, just to give you a heads up, because remember it was like this for a long time and then it spiked. So they're getting ready for I won't get into the thing. So just give me a second. I got to turn off my workspace here. There's one workspace. I don't want to hear this stupid bong anymore. There we go. So when you're looking at a long term, that's the first thing you have to do in your notes. Find out which direction is going, because the longer the time frame, the more domineering it is. And if you look at it week per week, now think about this.
PK. Said how can you tell if the 30K is shorting or long?
You gotta wait, AK. I know it's good. This is going to be a little bit longer video than I usually do. I want to do education today, and I want to show you a lot of the indicators so you can understand. So, but if you look at it, look at this. There's a green bar for a week, a red bar for a week, a green bar for a week, a red bar for a week, a green bar, okay? And I'm not talking how many weeks it's going. But if you really look at the price action, it's stair-stepping, okay? And it's very, very frequent. Now, when we go to a daily chart now,
PK. Said okay.
okay, no problem. Now, when you're in a day chart, as you can see here, you know, see here, you see the arithmetic patterns. And I want to keep it blanks before I start adding indicators, and then you can start getting into it, because we are short-term traders. So we have to, if we could have the unlimited money, and there's certain for position traders, and you can say, oh, wouldn't it be nice to get it in here and just let it run for 3 months? Eventually, when you guys get to that point, you can. But if you're just trying to build up your account slowly, this is what it's for. So now, when you know, when you're breaking it down from daily, and then let's go to a minute. It's a lot shorter now. So now we're looking deeper inside that zone. And then we get to a 1 hour. And now see, you're looking at it. So you're looking into that magnifying glass. So think about it. You're seeing the moon from far away, and you're getting closer before you land to the moon. And then you're down to a 5 minute, let's say. And then you get a 1 minute. You look so close, and then all of a sudden you're at 15 seconds. See, you can get confused. But if you knew what the original projection was, this could be noise. Okay? Now let's go back to the day chart so you can understand. So we know the weekly chart has been just going to skyrocket, and it can't go forever. And I won't do Fibonacci's at that point on the weekly. But on the daily chart, you're starting, you said, you know, it goes up and then it comes back down. And it goes back up and comes back down. When it's coming back down, up, down, up, down, up, down, like this. Okay? Before I put my indicator on, just on basic Fibonacci theory, we'll start here. Super long time frame. First pull, retracement, coming back to a zone. If we know in theory, if you understand Fibonacci, if it does a shallow pullback at a longer time frame, because we're in days here, and it's in there, it's going to be a continuation. But on a longer term, we're hitting 127 extension, which means it usually tops out for a turnaround. Could be 141 or 161. Okay? Now, when we do micros, getting smaller and smaller, as you can see, they're getting into certain zones. The most optimum zone that I like, of course, is 61.8. And as you can see, this was a normal harmonic. Boom. And then continuation. And if you go, there's more 61.8 retracements. If I can zoom this up so you can really see. Let's go like this. There you go. There's the next 61.8 from right here. And you get to the next one. 61.8. And then, of course, they do the 100% pullback to knock out everybody making profit, and away you go. So it's all relatively speaking. So once I started figuring out that to start looking at a long time frame, and then we get the pinpointing, I started, of course, of all the programming, I started doing so much research from GAN theory and all this stuff. And after all that theory, when I came to conclude of writing a lot of, or many things, I wrote, well, a number of projects. But let's go right to the basics, such as I made swing scanner. Long time frame. And I started realizing the cycle of the market, and I was trying to pinpoint over and over and over again when it was starting to do this. And so basically what I do is I gave you guys a time frame of saying when that time usually hits, you have the highest probability of it to go within that direction. So you have red and green, red and green, red and green. And when I say the market is kind of manipulated to a certain degree, I have to show you something here. And it's not about trading guides today. And a lot of people, you know, if you guys come and go saying, well, this is boring or whatever, if you guys really listen to what I'm trying to teach you guys today, you'll get it. You might have an aha moment here. Okay. Let me go data series. Let me increase this so you can get it. 720 here. There it is. Okay, see how the market was creeping up, creeping up, creeping up, creeping up, and we have timestamps going up and down, up and down, up and down. Now, there's a timestamp here that says February 23rd, 2020. Okay? I want to show you something here. That's it. Let me find it here. Let me find it here. Sorry, guys. Okay, I'm going to bring it over. Headlines from the New York Times, Sunday, February 23rd, 2020. Okay, there's still in the elections, how Bernie Sanders dominated. We are in a petri dish. How a coronavirus ravaged this cruise ship. It just started. Next one. Let's go down here. Coronavirus spreads as new cases double in South Korea. Now, let's keep on going here. Okay, let me go back for news. 10 things to know today, 23rd. Okay, South Korea, highest possible alert of coronavirus spreads. Remember, US never had coronavirus yet, or so they say. So, the interesting thing is, the big banks, I'll say, all the big guys, they actually knew what was coming ahead of time, and guess what? They set their position up. They were probably watching all that other news from WHO, and they're planning the thing, and boom, for 2 cycles here. And so if you ever see a major dip, and you could play this, guys, literally, go back in time, literally see the news events, even here, October 31st of 2020, and I'm going to do it here. I'm going to go news, watch this. See if we can find it here. What's that, 2020, I said? October 21st? Yeah, October. We'll find something. There's going to be, let's find something good here. Or maybe it's a Taylor Swift that. But anyways, Well, I digress. But anyways, if you keep on going day after day, especially major swings, you will find crazy news events that they set up. That's the first thing you need to know. So when they're doing this psychological thing on you, what you have to realize is the market, these guys pre-plan their next few weeks for the next position. So when we look at it, if I took a short here, even though it reversed, by the time it was all said and done, and usually what I say is I take the short, and if it breaks out, I wait for the next one. But see this? They basically finished up at the same point. They just wiped everybody out, right? And if we do it again, go ruler here. This one, or somewhere right around here. I hate when I use the wrong ruler. Go from here to here. That was your big move, that 800 points there. But if you go over and over where the timestamp starts to finish, good morning, Isham. You can see it, 900 here, 900 here. Come on, I gave you a time, and the reason what I'm saying this is, when I do that, I already, you know, when your timestamp is done, guys. Thanks, Isham. I feel special. I do. Yes, I needed it. And I feel good today. So, if I'm giving you a time saying, how do I know from here to here it's going to turn around? That's not the point what I'm getting at. Is what I'm saying is, from here to here, mentally speaking, the way I've written the software, that there's going to be more short selling than long selling, majority of the time. And if you go back throughout history, it usually does that. But the other thing is because I said we have to look at a top-down approach like this, when we go long, when we're in the long phase, let's be more aggressive, because on the longer time frame, we should be making more money. But on the short phases, there's just pullback still. And see, now, once you start understanding that, when we do our shorts, we take quicker trades. When we're on longs, we take longer. Hey, that's right, long and long. Longer time to complete a trade. Reason why is we can cash in more, or try to become a consistent trader. Let's see if the market's still flat. Yeah, they're still going to play here for a while. I'm not even worried today. They're not going to be doing anything today, guys. So that was the first indicator. And then after a while, I started realizing that if I could predict the time on a longer time frame, can I predict the time on a shorter time frame? And I worked with other companies writing software and all that, and I changed things for myself because certain things didn't jive, but I won't get it wrong because every theory can work to a certain degree. So what I have is I created two other two. Well, I won't get to that data mining software yet. But after I realized that you have to look at longer time frames and start judging your trades originally from there, then I went to my next level of learning how to trade. Then I started creating a session map. So the session map, what I'm saying is, remove. My previous videos, which I had to pull down because I never had a risk disclaimer. Come on, open. There we go. Was market analysis. I'll get market cycle was the most recent one. And so what market analysis was, and I have it set up for New York time. So you guys, you have to remember, if you're on my computer set to Eastern Standard Time. I live in Mountain Standard, but I like to keep my computer as New York, so then it's so much easier. Okay, so once you have this set up, what I did is I wanted to look at the last two sessions. I didn't really care for the Asian session at the time when I first wrote it, but I wanted to know the market sentiment of all those days when I was trading. Let's go to 15. Let's go 30 even. No, I'll go 15 so we can see a little bit. And then when I started realizing, I started saying, you know what? This was London's session box. This is New York. New York was always the most violent because I traded New York. And what I said to myself originally, if I knew the bias was the market was going up on, let's see here. So we had markets going up on, geez, I hate when I do that. Can I see it? Let me crunch this. There we go. January 28th on. So what I would base my trading on the market analysis, if you can afford the risk reward, it's up, come on. I would put, actually I'll use region this time because they're so close. I originally would say if I broke out of these boxes, I'd be looking for longs. If I'm retracing into it, I would have to break out of region. I could take a shorter position because this was so tight in that zone. So anything below there or anything above there to make profit. Other than that, we know we're bouncing. That was not a consolidated trader. I was a range trader. I was a trend trader. But if I knew at the time that if I could take a trade to make profit like this for a few hours, and you'd have to wait till it breaks, and then you're pinpointing it. Once it finally, you could understand the risk, that's a lot because we're in NASDAQ, but then you have your reward. See, you got your 2 to 1. See that, guys? So if you were doing that day in and day out, here's your breakout here, you're good to go. And if I saw it come back down and just playing around, not breaking these zones, I know we're good to go. Over and over. See, went back in there, first way to go, over and over. And I wasn't good at finding support and resistances at the time. The only support and resistance I knew originally was maybe the London box. That's about it, every day. And so I would look at the structure. I remember there's a guy saying, but from here, break down. Or from here, break up, and it looks like it went against you. And so when I correlate it with what part of the trend we are on today, see, we're at 932, the market's not even moving. See, it's flat. That's why I'm not trading today right now, guys. But so now I know the market should be breaking down. Actually, let's go to 15 minutes. I want to see exactly where we are on this one. Let's see where we are. So we are 51 to 70. So we got a ways to go yet. Okay. So when I started realizing this, then I was starting understanding, you know what? You can make, or you can be a consistent trader, just as simple as that. But my risk was too high at the time. So, because I'm trying to pinpoint my trades, at least I had some type of map. First, the map was where I was in the phase. Second map, later on, getting closer and closer. Then after that, when I started realizing there were certain times in the day, why 90, like I said, 95 to probably 99% of my trades I lost in the first 30 minutes of the day. And all of us, we want to get that market open, that rush, that adrenaline, that high, that feeling to get that winning trade. And if you get it, you're like, woohoo, right? And then all of a sudden, if you do lose, and then you're catching up and you're frustrated and you're try to break even or whatever. And I did that for a while in the beginning. And it took me a long time because I was so stubborn and determined to win. I shouldn't say the word win, but be a consistent trader and saying, I know I can beat this market, because you always see these guys on the internet, I'm all great, blah, blah, blah. And I says, I know I can do it. And I'm a math guy, and I've been just crunching numbers. I realized I was seeing anomalies. So what happened was, the third started breaking down even more. And then once we get through this theory, then you'll understand. Oh yeah, I'll do this first. With the times, did she punch out? Yeah, she's still playing. Let's see here. Yeah, see, there's nothing moving, guys. You're just gonna be just dropping all day. I started realizing, and you know, if you ever read the book, I think it was Flash Boys and all this, and high frequency trading and all that, everything's computer driven. So I said, well, if Facebook data mines us,
Nice.
and if everybody else wants to data mine us, because they say we want to use your data to sell. Oops, I'm going to turn that off right now. Why can't we do it to them? And lo and behold, as you can see the times in the front, and I helped you know, another company with their whatever their algorithm was, and then as you can see, just on time itself, why would this peak out here and come down, and then here close, you know, sort of up and down, and I was getting closer and closer, over and over again. This is a 5-minute chart. Why don't we get really high frequency and let's go to a 1-minute chart? See, 931, they want it to go down. I'm saying, well, you know, if I'm a quick trader at 931, I get it from there to there, man, I made $80. Slow day today. 736. Oh, it went against me, but look at it moved at that time. Or 802 was off by a few minutes, but look. I made $80. But let's go to a more violent day. Let's go to a violent day. A regular, lately, what our current market conditions are. Look at this, at 9:35, it did try to push down. It was just fighting a lot because you're early in the morning. Like, look at this, it's crazy. 17 points. Wow, that's a good day. Let's go stand drop here. 9:55, 10 o'clock. $600, 10 o'clock. Oh, it looks like going against you, but it finally hit. Look, boom. 33. Oh my gosh, 10. Over and over again. So, and I'm saying, but there's the times. It doesn't make sense. Well, how can I do that? Look at 9 o'clock already, from here to here. 9:31's vibrating. Look at this. Market's not moving, guys. So, and this is just one indicator. Look at this. This is. I've only shown you time scanner, and I've only shown you, well, 3 indicators. My market analysis to say what's the price ranging, and the structure. Market should be going down. Market is tight right now. They're playing because it's, you know, long weekend, but I could see where my zones of interest is to break out, and then looking at my times to see if they're working. And now we're pinpointing it. The uptrend is still up. So technically, the up should be pushing greater than, and the selling should be holding because they're cashing out. Now they've reversed here. It was going down aggressively, but they were far enough that they said enough is enough. So they cashed in, held, cashed in, held, over and over. And so you have to ask yourself is, if that's the truth, so when you add this originally, because we're looking at this, see, Bitcoin hits record high, nearly 50,000 major flock to crypto, you know. Now you're getting excited, you're getting distracted. But we already have this. What's this for this? And what I'm trying to teach you guys today is this is only an accelerant for this. If we never ever read this once and we followed the map, we'd still be okay. But if you could see what they're trying to do, then we could see how much more the price action will become. If the news is boring, it does this. Now, so what happens, they try to put you to look at this, to get excited, because they know all of us traders are looking at this time frame. So guess what? Let's take their profit and then move our position, and do the trade for the day. So they just destroy us, guys. That's what's the key. That's the secret. Excuse me. They want you to look at the news, get excited, saying, "Oh, it's good news, it's going up," and then we put our positions, then it could go down, or vice versa, or we'll follow. We don't know. But now, if I data mined it, now if I go from here to saying, okay, the market's supposed to be technically going down for the next week or two, and the structure is probably, it's really tight, so it looks like there's consolidation. So there's some type of contracts happening. We know what times to buy and sell. And we look at the news, we're starting to understand their game plan. So I went one step deeper when I was writing and trying to test the software, trying to find a solution from all this noise and this madness. So what I did then, I went one more extra level on the data mining side. Where are you? It's a market analysis? No. Market scanner. I literally, on the bottom here, and because I came from a drilling background in the oil patch, I wanted to do basically the same thing. We have charts that we record from the circulatory system and the drilling side, everything, drilling, weight bits, all that stuff. And what I wanted to know, if I was going to be hitting bottlenecks at certain times, how aggressive the market is moving, and see if the market is consistent. So what I did is I recorded previous data information, and I want to see if it's going to be consistent. So, and that's what I've done. And with that, using that information itself, using the market scanner, I'm using, a simple moving average. You can use VWAP, EMA. I might add some other analysis on it to record the map. And when the map is following properly, this is weekend stuff, crappy. But here, I'll give you an example. Blue was supposed to be current market conditions, and red was previous week. So, if that's the case, and remember, I can get rid of this night. I'm going to get rid of that one right now. They're two totally independent indicators, guys. So you have to realize. So, if 932 was supposed to be a peak, it did hit a peak. And then if 938 was supposed to be a valley, so as you can see, it was a valley. Remember, this red is not this chart. The blue is. Okay, guys? And then 944 again. See, we kind of bottomed out. It's and then 1005, even though it was a bottom, but it was a peak. And then it was a lot of chop. You can see it. Does this look choppy, guys? Very choppy. So I finally had kind of another aha moment saying, if I get this, it's going to go like this. If I get it, I want to see long moves. So from 1120 to 1331, there should be eventually a really long move happening. And I can watch when these, I gotta open this up so you guys can see. When these white bars are getting there and crossing over one side or the other side, the move is finally going to happen. And then what I can do as well, because it looks like it's doing the opposite thing, I can just switch the button and follow my map. Even though it was delayed and everything was choppy, it was But you can see every little, see this big drop here? This little red dropping going crazy? Well, guess what? It's doing the exact same thing, even though it's above the previous market analysis. But it's doing pretty much the same thing. If I could shift, I can't use my hand. If I could shift this red up a little bit more, we can align the markings. And when it starts doing that, and what I look for when now I'm trying to pinpoint more and try to trade less and et cetera, what I wanted to do is I wanted always to find an area when all this noise is done so I could take this trade to here. And if I have done that successfully or consistently until it breaks, but let's say even if I got in here and I was watching, excuse me, and I wasn't even good at support and resistance at that time. But if I waited and waited until it broke, till the end of the time, it wasn't much, I would have probably taken it here, I would have probably freaked out on my earlier days. But until even from here to here, you were still up, what, $600? Almost 600. And then the next one, from here, it went down and then bounced. But you would do that over and over and over again. And we're at a sensitive chart, guys. You can even go to a 5-minute analysis and try to find it. And guess what, guys? The market today is terrible. So, after all that, and starting to figure it out, I kind of had a roadmap now of what to do in trading. And see how much the market moved today. I'm just curious. Yeah, they're playing. They're playing within that zone, guys. See? There. So now I was really interested in trying to find areas of support and resistance. And it was, what happened was I had just one guy, asking me to code something for him. Because I was learning and I wasn't even having this software, doing all this. It was all for myself. And at that time, when I was writing this, and then we were talking about market open, and I never realized how powerful the price of market open is. So what I wrote at that time, because I always had a difficult time. It was always easy to enter a trade, but I could never ever find a target or a stop loss for myself at the time. Oh, wait, you know what? I got to turn some things off here. I just want market open. There we go. And what I didn't realize how powerful a market open price was. So I always said is if I can get within that market open price, if I was on the right side, I can take this trade. As you can see, your profit. But what I found out is once I had market open on the right side and I went data mine, like I said before, with time and correlation, if I'm on the right side, I can use this as targets and then here as targets, back and forth. And I started realizing, and this is just New York open. See, it went through here, and if it broke through, keep on going, broke through here, keep on going, and now we're starting to vibrate. But guess what? It went to another market open. 1, 2, 3, 4, 5. That was an aggressive move. Now I finally said, okay, for myself, I was a little more excited, saying, you know what, guys? I've already knew my direction of what my sentiment should be. And if I can break here, and I have market open pricing, now I'm saying, okay, I'm getting a map. I'm starting to get the market. Oh, and also looking at the accelerant, saying how much they want to really push the market. And also how early in the phase I am. That's you'll see an early phase and then aggression, early phase aggression. So I'm adding this map slowly but surely. This is my learning process. And also I showed you guys as well Now let's put this in here, and I'm building up. And that's why you sometimes say, why is it so noisy, my charts? I try to teach as much in such little time. And as you can see, now I have 8:55 saying it's supposed to sell. So now I have a time saying, and we know we're on the sell phase. Okay, we special short. Market open hits. We see vibration. Away we go. Now we got target 1, target 2, target 3. 1040 is coming up, so maybe I'll stop. 1040 shuts down and goes up. So now I had actually a really good trading plan. All of a sudden I started making some money. But I was still high risk at the time. But still, 71 points. Kept on going, kept on going. So if I did take that, I probably would cash out in the first mark. But let's say we did all the way to that time. There you go. $1,000, $2,000, $3,000 move.
Top of the morning.
Top of the morning, Momo. Momo, there's no trading today. I'm just educating. So as you can see, $3,000 was that move within from 9 o'clock for an hour and a half. That's not a bad move for one. Well, I'm always talking one contract when I'm saying this, guys, so you have to realize that. You can go multiple contracts at the end. So now when I finally understood that trade map, then I started, that Pandora's box is just totally blown up my mind. Like I'm saying, wow, you know what, this is crazy. So I was high risk, and then I was starting to trade like a cowboy, and I started losing money because I was getting cocky, and then I had to step back. And then I started realizing one thing and another. But then what I'm going to do is, in conclusion, out of all that stuff, I just want to go from my slowly progression to right at the end of currently what I see now. What I found out when adding some of the structure here, actually, no, I have to add 2 more things here. No, I'll go to the end. The market maker, I call it. Once I added this last weapon, it just went, my head went, I know it sounds weird, but it did. It literally went, I couldn't believe how accurate at certain times, many times, it actually works. Now, I'm going to get, no, I'll keep the map on there, and I'll keep the times on there for now. And I'm going to close market open. And so you guys can understand, after a while, once you get your trade plan going, where you think you're insane to do these trades, but we're talking risk versus reward. Let's go back a few. Ugh, that's ugly. So we're doing New York Open. I can talk about London, but it's all relative. So let's say you're doing this move, and all of a sudden you're like, oh, I missed the trade, right? The one thing that you guys know, if you have this market open price, because I believe when I was doing my analysis over time, that the bankers, they have so much money, guys. Actually, I'm going to do 2 things here. I need 2 things on this one. They have so much money that if they dumped it the way we could dump it, the market would crash, or it would go into, and it would just start hemorrhaging. So if once you use this zone, these are your zones of interest. This is the most current one. Let's say it was the current day. This is the zone of interest where you know the market maker needs to get their position before they do their big move. They set it up. Every day they set it up a new marker. They put their marker line in, and they do that every single day. They might move it up to get to a certain point that they like, and then they'll punch it. And as you can see, that marker started, and I gave you the line in the sand. And I gave you this, right? I'm saying that's the area of interest they want to get at. They moved away. You can make some profit. They'll come back in. You see your trend going. Okay, guys? And then all of a sudden, market open happens. And I said, I want to take it off for now. It takes off. And takes off. And guess where they go? Think like a bank. Where you as traders? Put your stop here, below the swing. Guess what? They go to your swing and knock you out and you're out of money and they're laughing at you. Then they come back in. They set up again where they the price point that they like. And guess what? They go again. And that could have been to the area where other stops were. I don't record it because the trend changed. But there were stops here again. Remember, you put your stop down here. Guess what? They do it again. Over and over again. So if you knew that map, then you're going, okay. Like I said, step 1, what direction we're going. Step 2, what's our structure. Step 3, we got time frames. Right here was the most current aha moment when I added everything together, and now we have a trade plan. Okay? Now everything else is now about pinpointing trades, when to get the best position of a trade, etc., etc., etc. But if you're patient enough, and I know it's sometimes so frustrating, that when you do that day in and day out, see this was on the buy phase, because remember we were in the buy phase, we're just starting the sell phase. Let me turn off the, yeah, we can add the times here. So what's happening right now? And as you can see, this is where, out of all this, this is where they wanted that price point to be. So it's going to be one of two things. They're doing it for a couple times. They want to get in here, load up their position. By the time it's all said and done for the day, guys, because it is a holiday, so I have to take it with a grain of salt. Still noisy, but this is their price point right here. Even though it started here, it's within that range. But what will eventually happen when they're done, I'll say maybe tomorrow, because and then you're looking at your trade map here, guys. See your trade map right here. It's all consolidation, so I don't really care about this. My trading will be probably the next day at 6 o'clock on till 3 in the morning. If you look at 6 o'clock after this holiday, it might take to 8 p.m. the Asian time to start. Well, I'm talking New York times here. Is it 8 o'clock my time? I don't know. I have to look at my map. You'll start watching the market get a little more violent. There will be another market maker price starting somewhere around here, unless it depends on the end of the day. Then you can use point A to point B for your first target market. If it starts dropping really aggressively, then you've got this market to this market. And you just keep on going. And then look at this, 1, 2, 3, 4. Now we know we're going to get into all this noise again. Okay? Because if you go to the left, there's your noise again. See? There's your noise. So we have a map, guys. Okay? And so and I hope you guys are understanding what I'm trying to teach you here today, because trading is psychological. It's 90% psychological, and it's about 10% about just pressing the trigger. And once you overcome that, and you'll learn W patterns, M patterns, support and resistance, etc., etc., you can really pinpoint trades. And when I'm talking, and now this is the other thing is, and now we're going to get into a different thing. We're going to go into a few different charts that I used to trade to try to make, a few ticks here for scalping. But before I do that, what I'm going to do is, and I've done this before, RTY, YM, GC. There you go. I trade NQ, and I might have to switch it up depending on the clients. Some guys for, saying, why don't you try RTY, YM, or whatever. I like NQ because it's fast. I make quick money and done. Okay? If you're more of a patient, conservative trader, you might have to try something else. But as you can see, guys, I have five future charts here, guys. Out of those 5 future charts, and you can be patient enough and you understand that structure I was teaching you guys. Look at the maps. Are you telling me these are all supposed to be different markets, guys? Okay? You're telling me this W pattern here, this W pattern here, this W pattern here, and this W pattern here are all the same direction? This dip and this dip and this dip and this dip, the same direction? This spike, this spike, this spike, this spike, the same direction? Look at these 4 here. It doesn't matter what you trade. I trade NQ because I like that fast movement. This could be more relaxing, a lot slower. Gives you a little more time to set up your trade. Feel a little more confident. ES, a lot of people might like moving it. It moves really slow, but I find 1250 a tick. It's a little rich on my blood if I'm wrong by 4 ticks. But seeing what happens, usually gold usually, and I don't know, I haven't looked in gold in a while. But gold usually is supposed to be going the opposite direction. So if this is going up, it's going down, but I don't know what's happening right now. As a general term. But what if I add one more data series here so you guys can really, really understand? I haven't looked at it in a long time. I burnt my account a few times. What month is this? This is February, right? So 03-21. I haven't looked at oil forever. And oil's a different beast altogether. Let me see here. Let me look at the market. Yeah, she's still doing a little bit of the same. It's not, yeah, it's still doing a little bit. It's just moving a lot slower. It's at $60 a barrel now. Wow. Oh yeah, because they cut the pipeline. $40 a barrel. Interesting. So it doesn't really matter what you guys trade if you're in the indices here. They're all the same. So it doesn't mean you need to look at 4 charts unless if you're trying to look for the best impulse for the day. One can be leading, like saying one might kick off a few seconds before, or in order for yourself to go to the next one, you can use that for correlation. Okay? Now what I want to do is I'm going to go into other charts, and this is what I was saying is I did a webinar a long time ago. It was called 21 tick pullback. And the reason why I said that is I couldn't figure out why you see rhythms, constantly rhythms, like a heartbeat rhythm. And I did an analysis, and I found out it was around 21 to 24 ticks. I'll do that. And I'm going to put it on a range for now. 21 to 28 ticks. And I couldn't figure out why it would do that. And the only conclusion I could think about it is on the current futures market, if you lose 20 ticks on a YM, you lose $100 in one contract. Same thing with NASDAQ. With oil, of course, it's double, right? Because it's $10. So once you hit the losing $100, you close your trade and then they go. Because we psychologically we're saying we don't want to lose more than $100. And that was the only reason why I thought about it that way. So after a while, you're doing so much research, looking at other, trading systems and all this, and I finally finished up with the tick range. And with the tick range, what it is, and you can switch it, what you will notice is once you start breaking out, that was a good breakout, and if it comes back and you're trending nice, you can get in close within the zone and go for your trade. That's a runner. So that's a totally different thing on a runner, but that's what you'd like to see. So when it gets back in, you take your trade, minimum risk, maximum reward. Once you start understanding all the other things on the game plan. So this is a 4-range chart. And once you start seeing it bouncing back and forth, you know you're consolidated. So, but you could see I created these little white dots here to say this is supposed to be a buy bias more than a sell. Doesn't mean it's always going to happen because the market's like switching over. So what happens is, so now the market's crashing and you're thinking, oh, I lost a trade. There's your yellow dot. Put your trade in, away you go. And it doesn't look like it's much. But, and I'm on that, or I'm on lamb on this one. There you go. There's your 50 ticks or $250 trade. And previous, look to the left to trade the right, 31276, 31276. It literally hit right to the tick. So you had your profit target already set up. So you made your money. Now, as traders, when you get more experience, you're thinking, well, you could say two things. This is an M pattern, or is this a double bottom? See, you're playing these crazy games. But now, all of a sudden it bounced up. Now you're getting a whole bunch of white dots saying, oh, maybe, maybe, maybe. And then what you can do, because it's blue and yellow, what it means is it's a buy bias. It means it's probably going up. And guess what? Way you go. If you missed that trade and you were still being nervous, then you just sit and wait and wait and wait until you get to the dot. Put your trade in on the line. Away you go. This is an aggressive run, guys. So what I'm trying to show you here, and we're going to go through different charts now. I hate when I do that. I think I need more days. Just give me a second. There we go. Let's just go back and forth. See, and the thing that was killing me was this, consolidation. Because at that time when I was writing it, I didn't understand my support and resistance at that time. So you're thinking, okay, you just jump in as soon as you go yellow. That's why I created the bigger map. But once you get going, over and over and over again, once it starts trending properly, and if you know your support and resistance level and she takes off, you think you miss it, and you come back in here, away you go. Hola, Jons. Welcome to the channel today. Education today only, guys. There's no trading for me because you can see what the market is. It's that festival. But as you can see, at 10 o'clock, down, bounce, go, down, bounce, go. You made your profit. Okay? Now, if you've been watching me on the trade channel for the past, or live, trying to do a trade, and last week, like I said, first thing in the morning, I apologize. The whole week last week was a write-up for me. I was really sick. But if you could see, I keep on saying I've been trying to teach you guys how to trade top of the hour. Okay? And what I've been trying to teach you guys, I'm going to use region X. I always say the 10, 10, 15 trades somewhere within there. Okay? 10 o'clock, 10, 15. Look at this. Yellow dots, vibration, vibration. There's your trade. Let's go to 11:15. See if there is anything. 11:15. Technically, it reversed on you. But look at 11:15. Dots, dots. I was probably looking for a buy, but it took off. But guess what? You had a second opportunity to get in, and away you go. 12 o'clock. Anything at 12? Just really whippy. So I'd have to check the support and resistance, but by the time 12:30 kicks in, away you go again. And you could do that over and over and over again. But see, what would happen is, if I go to from a YM, now they're saying, well, what does RTY look like? Look at RTY. Oh, let's go to a day like, I'm just trying to find 10 o'clock here. 10 o'clock. Starting to vibrate down, away you go. That one kind of sucks, but it went too fast. But once you get that vibration bump, once, technically those can be trades, but I'm just trying to be as conservative as possible with you guys. Let's find another one here. See if there's any rhythms. Same thing here. Turn red, bounce back, away you go. Turns red, there's your line, go again and again. Depending on your support and resistance. Remember, I said that from the previous things. Okay? And over and over and over again. And then NQ, whoops, let's switch it to NQ. Sorry, guys. Or let's go to GC first if you're a gold trader. Gold's much slower. But see, it turned red, came back there, and away you go. Look at this runner early in the morning if you're in another part of the world. Boom, down here, boom, 7.5. So that would be what, $750, guys? So it's these pullbacks was the psychological thing. And once I figured starting the rhythms, depending on all that other stuff, like I said before, accelerants, times, swing scanner, etc., you can start predicting more and more and more and getting your probabilities. Hopefully your percentages are up. So as you can see, there's nothing going to be happening because this is it President's Day? I don't know what it is in the US. Canada, or my area, is Family Day. So now we know. Now what I've done is, because of the volatility, I didn't have it set for volatility originally. So what I did is, because I usually set the average was range size of 6, what I'm doing for NASDAQ right now, I'm using a range size of 15. So I gave it a lot of time to see my groupings. See? This is what I want to see, the groupings. So now I know the groupings are failing, so it's going to go down. This is on gold, but for NASDAQ, I like it for NASDAQ on 15 right now. And the only reason why, let me see here, yeah. And I'll show you why. And you can switch it to 10 to 15, somewhere around there. That I've noticed that if it does take off and it comes back down within that zone and playing enough, that range itself, and we know where our support and resistance is, I didn't have to get scalped out each time. I gave it more time. So there's your almost $400. Okay? That's on the range bar. Is anybody a uni Renko bar person? I'm going to show you something on it. Oh, I also added on this one, before I was doing range, I changed this system as well, if you guys like using tick range. And it is in there on the data series. What I created as well. Come on. Was a uni Renko T-bar versus a uni Renko. I have it set for 1510 for now on this example. So it's when it does that. There we go. Open it like that. So we could see direction. And within that, I added as well on the system. See all the uni Renkos here? Uni Renko price bar. Yeah, I kept it 110.48 for myself. I'm on NASDAQ, but that's okay. Uni Renko trains, that, and Uni Renko pivots. And I also had one called price volume, I think it was. Anything with the uni Renko. There we go. That's exactly what it was. So basically what I created in time, because I was trying to create some systems for, different types. So what this would do, excuse me, is try to stay out of the noise. So I created saying, if I get in here, I can continue on, and if it does reverse trend, it will go this way. 54, 56, yeah, that's 48 ticks. Okay? So when it does that, and we're following it, we had pivots. Let's focus here. I put I'd show you that other one originally. But what we wanted to do is try to find these dots here. See how she's dots and bouncing? We knew, and then we found our support and resistance, and that's your trade. You get it, guys? It was much cleaner. And also, boxes would show higher volume in a certain zone. So because it was so sensitive on a Unirenko T-bar of 10 ticks bouncing up and down, higher volume would create the boxes. All of a sudden, and how it works is, and you can change your colors, these 2 contracts, 3 contracts, 4, see, oh, there's 41 there, 92, nothing really. And then all of a sudden 119, and you'll watch these numbers just start chewing it up. So you can see who's in that little fight live. And so right now, of course, you can see the market's just swinging back and forth. Now, what I'm going to do one more time is I'm going to go back to my early days again on the analysis and trying to find out, when I was trying to figure out where was areas of opportunity to buy and sell. I'm going to be back when I was a minute trader, 1 minute trader actually. And it was my first indicators. I'm going to add 2 to them.
Dovetail 3A. Say can you add market scanner to this chart?
You can technically add market scanner to all charts. That one will be a little choppy, but yes, you can. What I would do for you there, Jans, is I would put the market scanner on a 1 minute chart just to check the pattern. And yeah, I put the market scanner on there. Time scanners will work on it, no problem. But I use market scanner because it will just a smoother. You won't get gaps because the issue is the market scanner is based by time, and range bars, volume bars, and all that is non-time based on tick charts as well. You'll get gaps in on your graph. So, but yeah, you can do it, but it looks choppy. So now I'm going to add Fib Predictor, and that was my first one. And I'm also going to add, what was the other one I was going to, oh, no, I'm going to add 3. Why can't I think? Oh, there we go. So you can really understand. So there you go. That's as simple as possible when I was starting to trading, when I was starting to program. And so what I was trying to do is I was trying to find out where support and resistance is. And for myself, as my favorite trade was always by this blue line. Second favorite trade, of course, was this trade right here. See? And the reason why is once you start getting down in that zone, the minimum risk for maximum reward. And I still use that today, guys. I'm telling you, I use it quite a bit. That's why when you see me on the live, I have tons of charts. I'll look at a few things like this. Where am I on this position? Because once it starts vibrating, look at this. It looks like, oh, great, great. Oh, no, it's dropping down. Boom. You're in there. Look to the left, support resistance, but look at this. Bang. Hit it again. Boom. Away you go. Now imagine at 2 o'clock, if I let her run all day, you took that trade. $121 points, guys. What is 121 on that? Here we go again. Look at even on the doldrums at night. It comes back down. Even though it's starting to trend down, but we're still on the... Remember I said longer time frame versus shorter? Well, this is a longer time frame versus this one. So look at it hits. We still have a few attempts before it finally fails. Boom. And then it finally failed. Now, when I use that in correlation to market maker, and we have a big gap, now I have a target when she's going crazy like that. Another 39 points, and then it went back to this line. So we can... But over and over again on my earlier days, like you're thinking this chop, and then it comes back down. Now you see where it's vibrating. You could take a conservative trade if you see it the first time, get within that zone, come back to market open. Over and over and over again. And how I use this is on the slope. So if you're looking at it like as big as possible, it looks like it's flat. So what I usually do, I will just crunch it as tight as possible to see what the slope is. See? So with this major drop off here, the slope is coming back is the whip up, but look at it's so the slope is so tight, you know she's going to go down, so you could wait for this vibration to fire down. Okay, guys? So there's and then what also in my earlier days, and this is when I said when I was trying to make $1,000 in 30 minutes originally, when I realized the power of Fibonacci in correlation when you add everything together. Overnight, this was the halfway band from the top to the bottom. So we rearranged the whole night from here to here. Okay, it was a 67-point range, and once you start understanding that, then we can project that if I'm above market open, and if this is I'm excluding guys it's long weekend. But on general rule, if she's tapping a market open and continue on, then we can try to make a target from here, 32 points. So let's say we can get at least minimum here. Because many times, especially on the NASDAQ, at the time, I don't have previous. And see, here you go, market open, market open, market open. This is as simple as possible. I'm trying to make it for you guys. So if you look at it, Fib Predictor, market open, trend cloud, top to bottom, and you can add your maps and all that stuff. And then now let's go for one of my favorite indicators now, market maker. So when we were going down, see the market maker, it's literally touching the bottom of that zone right to the tick. So if we were dropping down, I might have used this as a target, this as a target, or this as a target. And see how she literally hit that on the tick. You can't make this up. It's just crazy. Anyways, I sometimes want to just pat myself on the back. It's just crazy. It's just once you start figuring all these lies these guys do. So after a while, when I started doing this, now what you can do with the software, and then you guys can ask me, and because I don't know what type of traders you guys are, but it's even as simple as one indicator as the 915 in creating your game plan. If you know where support and resistance is, okay? If you start understanding support and resistance, you could say, once we break out of this box, this is my trade for the day. Above, try it. No, but look at it. I'm trying to go against the trend, but boom, away you go. Next day, let it come back in. If it breaks, let's see. And these little numbers would be a technical, could be stop out, but you would push it up once you break out. And you could see she's tapped 3 or 4 times. And basically what this box is basically a Fibonacci calculation of a 61.8% pullback. So as you can see, when it broke out, it literally hit 61.8 a few times, okay? But over and over again, and these are the days that you hate, but now if you start realizing what support and resistance is, you'll finally eventually break it out. So when you add this with, let's do this, guys. I'm trying to teach you guys time. 10 o'clock, and then there's 11. Let's open this up. As simple as possible. 11 o'clock, top of the hour, come back down. There's your 12 o'clock. Why am I doing this? I thought I had them draw mode. 12 o'clock, top of the hour. There you go. As simple as possible. So you're playing in this zone at 10 o'clock, so you know might hurt yourself. You're playing yourself at 11 o'clock, you're hurting yourself, and 12 o'clock you broke out, away you go. Just one simple indicator that I created. But I'm starting to understand what these guys were trying to do. And isn't it amazing that this indicator that I wrote, which is such a short time period, the 915, I call this the news event indicator. It's for about news. I'm seeing what the robots are setting up on news, that it came back down within that area, that news event time, to just push on there, because that's where they set up their position. This is more of a higher frequency trade. And so when you add things up over and over and over again, I want to get rid of these indicators here. Let me see here. And I tried so many different things, and I want to go into 2 more things, and then I'll probably wrap her up. Actually, I'll do 3 more things. Both level 2 work today. Level 2 scanner. Energy charts, we know about volume. POC. No, I don't like POC today. You guys understand that. Issue move fractals. That's what I'm going to do. I'll do that one right now. Once you start understanding it and adding more and more, I got to add one. Once you start getting it, understanding it, then you can start creating your game plan, right? Such as if you need a lot of information to help you, and you can turn off a lot of this stuff, guys, but I try to give you a recommendation chart of what these guys are trying to do. But I always say, if you can, always add, doesn't matter what you're trading. I'm finding out more and more now. If you add market maker just on your trade chart itself, and the reason why is we know this could be our bottleneck here today. Okay? This is their bottleneck zone. So they might come back down in here to continue on. Okay, so when you understand the map, I should do. I'll create something on the Discord, guys, so you can understand these numbers better. That means day trend is going up, leap tracker right here is going up, and then you got phase 1, 2, and 3, which are going down, which means this is your pullback here. We're breaking through the cloud. So if this breaks there you go, 4, 5, just hit, boom, boom. So, and 4 means we just broke the cloud, and 5 means this cloud is just turning red. So they're just saying we're getting ready to start going down, even though our domination is still the day trend and leap tracker. So it could be just a deep enough pullback. It doesn't really matter, guys. Now, one thing I'm going to do is, it's not going to show today the level 2. Just there's no volume today, guys. What I want to do is one last thing, actually 2 things. Now I keep on going here. And I'm going to give Isham a little bit of credit because he actually showed me this, the fib zone methodology works really amazing. And, but I like using it more on a 5-minute chart. I give it time. And it's very few trades. So, but once I'm in that zone, I'll feel comfortable enough. And in the money again. So basically, my trading theory is I don't care if it's in this zone. These are levels of Fibonacci retracements. But this is my risk reward right here, right in this zone. I'll put my entry in here, and if it breaks this line, I shut her down. And if I did that, if it does get in that zone, there's 15. It's a slow day today. But what if you get it once and it hits on the money, then you're off to the races. So yeah, you can. Yeah, this one just hit right on my line. That's my entry line. Way you go. Yeah, that one was perfect, right on the money, all the way up. So I use that, and I said I want to show. This one, and I also give Isham credit on this one as well. Is I wrote it, and then I just put the multi-time frame on it, and with multi-time frame I like it. And actually, one more thing. Sorry, guys. I want to show you a lot of different types of indicators so you can understand trading methodologies and questions. Okay. The difference, okay, there's high volume delta, guys. And then there's volume bars. I'll use volume bars. The algorithm is the same, except I added one thing in the delta, or the high volume delta, which is delta. It will sniff the delta and draw regions of interest of the delta difference. So I did a video and then I got that stupid phone call. But basically, my favorite trades, like I use the market maker, but this is my favorite trade right here. See this box here? If time is early enough and it gets in this zone, I want this trade as much as possible, because once I get it, it's gone and it will hit my targets. My favorite trade. It might take 4 or 5 days sometimes of nothingness, but once it does, imagine this, guys. You're in there and you hit this trade. Even for the rest of the day, it wasn't that much, I bet. Oh, it's $1,000. But I mean, if you get it here and you let it run, see, it's just over and over again. Did that one work? Let me see here as well. And so what you do is you try to see the first one, and you're looking at all your energies, all that other stuff. Away you go, 600. Then it comes for a second attempt. It goes back down, support and resistance, another 40, and then this one. You would really have to watch before the transition, but if you did get into it, it hit here, and the way you go again. 79. Yeah, it's, oh, I'm on a 5-minute chart too. And so here's this is the, I think this is the one, guys. This was the day when I got that stupid phone call. It literally hit on that time and dropped 134. So, I mean, after I don't know how many years of programming, guys, and I try to educate. This YouTube, the video is actually more therapeutic for me than you guys, is because I like teaching. I want to see you guys succeed, and I do this. They're saying, is it for sales or whatever? It says my sales are whatever. But after writing all this software, you know, in time, that's why I started renting this renting software out. It's actually, so it's to maintain the website, maintain everything else, and help you guys.
Have the same indicator for swing trading.
All this stuff can be used for swing or trading, yawns. I'm just showing you different methodologies. This will work on swing trading. The swing scanner itself is technically swing trading. The time scanner, if you're starting using, is for swing trading as well. Everything can be. It all depends how you want to trade. And like the time scanner, you know what? We're going to get into that right now. I'm going to show you, if you're a really swing trader, I'm going to show you something here. The time scanner itself. Oh, I should do that last one there. Super transfer trend, tick range time scanner. Actually, I'm going to put trend change here as well. I didn't show you that one. If you are a swing trader, because you're looking for swings, I don't want to look at consolidation time day today, guys. When they correlate, am I on 5 and 5? That's your swing going up. Tells you at 1600. Here's your swing going down to here. Here's your swing going up. Hell, here's your swing going down. It started failing. You can reverse your trade. But over and over, if you look at them, I want to find something. Am I in? I am. It's 5 minutes. Over and over again. 920 swing. Told you to buy. Way you go. 1120 told you to sell. You're in more violent. Let's try a different chart. Let's try a YM here. Oops. 120 sell, swing. 215 buy. 315 sell. 345 buy. It's telling you. And the reason why I'm saying, Jans, I don't know when you came in here. If you look to the future, you have all the times. So yeah, there's just, I got so much, even like this, Jans. This was Jose's favorite indicator for the longest time. Super trend. Where's my super trend? I try to get it to the point when it was a point to say when to get into a trade. You know, when the transition hit, once you saw the vibration, your super trend with swings, it's telling you what your potential profits would have been. You know, there's a lot of things you can use. But let me go here. Like I said, after all these years, I have enough armaments out there. And I continuously research, guys. I non-stop researching, just trying to get deeper and deeper down this rabbit hole. Because I find it, I like the challenge. But it's once you start figuring it out, and you start creating a game plan, and you start trying to do the game, or slowly but surely, you can become a consistent trader. Such as, for example, this trend changer only shows a few lines right now, but I want to show you. You can see a couple previous history arrows. This is supposed to give you a signal just enough when the energy starts kicking in, and see where that brown arrow happened? It took off. Okay. Brown one tried again, but you watch your price action, nothing happens. Same thing with the green price action. Brown, boom, takes off. Brown did take off, then green took off this way. But right now, like I said, this is the President's Day or whatever it is. So, other than that, guys, that's all I wanted to show you today. It's for education today because, like you said, the market is flat. See this? And hopefully you can understand actually understand, just get that aha moments showing that it is possible to become a consistent trader. And we can go through things of, actually, you know what, before I tap out here, this is basically, you've seen it over and over again in the morning, but what I want to do is, if we were just going to go as a simple analysis, what I would do basically is, let's just go to market maker. I'm going to market open, market scanner. We'll do that. That's about it for now. So basically, what I would be doing is, see, there's nothing here. See? 15-minute market scanner. Now look at this guy. This is how crazy it is. Look at the red. Look at the blue. It's following the pattern right on the money, guys. Look at how it's spiked up here on the money. So, looks like from 6:15 till 4 in the morning, we can start looking at some type of map coming up. Okay, guys? We'll let them play this game for a while. But what I know is this is going to be an area of, you want to use boxes or whatever on short term. And then this will be my next zone of interest, guys. If I'm going to be trading aggressively, I like this gap. There's nothing there. That's what I want to see. And then we'll have to go a little fine-tuner there, fine-tune a little bit more. We know it's going to probably hit this before here, right? There's some support and resistance, like this line right here. So, but yeah, I will do top-down approach, and then once I get to it, then I'll try to pinpoint. But remember, top of the hour, you can not look at the noise, and if you don't like a trade, and if it's not all those stars line up, like from day trend to all that stuff, if it's not perfectly at top of the hour, you can just wait. But once you do get to that, everything lines up, and you take that one trigger, you can just sit it and usually watch it run. And as long as you know where all these support and resistance levels are, then and you see nicer gaps, you can just one trade a whole week and you could be done. Okay, guys. Other than that, I'm checking out here. I'm still doing a fight with the bank, that robbery that I had of that $3,000. So we got some video evidence. We actually got them. So we'll see if they'll return the cash. Other than that, you guys, you take care, pinpoint your trades, trade safe, and you guys have a great day.